Hi, this is Brent with Trade Therapy. Welcome to the Trading Couch. We are looking at Block XYZ. Block was part of our top-down analysis on PayPal for our Clarity Spotlight last week. First time we've looked at Block since April. It was working its way through this classic accumulation structure. Block is one of the clearest examples of how accumulation after a markdown a process typically happens where reaccumulation occurred in the previous cycle. Studying the institutional business cycle provides you with some tells, some things to look out for. This is one of them. The institutional cycle starts with accumulation. There's markup, there's reaccumulation, and then there's markup. Then we look for distribution or profit taking that then leads to markdown, redistribution, and markdown again before it goes into accumulation. And typically, after a markdown process, the institutional business cycle will accumulate at the prior reaccumulation levels. And the end result is this massive base that's produced right here. So if you're looking to trade with Wall Street, learn the institutional business cycle and trade with them and not against them. Back in April, what we were looking at was this low created from the tariff scare. We saw that it was already below this most recent low. So there wasn't a lot of liquidity down here. We didn't expect them to go after this low. Thought we might see a little bit lower to take out some inefficiencies in this candle right there, but we did not see a lot of profit taking right here. We did not see high volume at the top right here. That would have indicated that institutions were raising capital to help short the market down, to raise capital, to take advantage of buying at much lower prices. We didn't see that happen. So that tells us that not a real strong incentive for Wall Street to get below this level. There's not a lot of capital being raised for that this is more likely a test and not an intentional push lower to try to accumulate more shares. Not surprising when we look at this accumulation structure, Wall Street's had plenty of time to build up their position and Block. This has been going on for 3.5 years now. And if you combine it with the prior reaccumulation structure right there, we're looking at a 5-year base right here that is positioned to be a springboard for Block coming out of this accumulation cycle. We see we've run Fibonacci from the high down to the low. So 0 is at our low, our 1 is at our high. What that does is it gives us levels that institutions have traditionally or historically taken profits at. So if we use that to set our targets to look to see where potential retracements may come back to and where potential advancements may target for profit taking as institutions begin their uptrend or markup campaigns. So what we see set up coming out of here, coming in April, we were looking at this low saying it's already below that. It might come down a little bit lower to take out some inefficiencies. And that inefficiency was a gap. And it did come down and fill that gap right there. And we got a bullish reaction out of that. What we got was this very sharp, almost vertical run out of that. And that leads us to believe that there will be a back test to this. This is a classic ABC setup right here. We looked across the entire financial sector this past week in almost the entire sector, whether it be XLF and the financial ETF, FinX, which is the fintech ETF, or iPay, which is the digital payments ETF. They all have this setup for a back test right here. It's August. This is volatility season. So we would expect to see a back test of demand again, where we did see this big spike in volume right here, which is very interesting because it happened near the top. So there may be one last push down here. We're going to be watching it very closely to see if they try to get down below this level right here. Don't think they're going to try that. Our targets, our trade that we're considering right here, because we're not in XYZ at this point, we're looking at entering potentially in this candle right here. So an ABC back into this level right here, we believe sets up one last test of demand before XYZ, before Block pushes off into its new uptrend and its new markup campaign. The daily chart really provides a really unique view into this. where we can see that nice impulsive move coming off of that backfill of that gap opening there. But we see this gap up right here on earnings. The gap up over the previous high. This is a favorite tactic of Wall Street, the gap and fade. It was one of our institutional literacy call outs last week. The intention behind this is to lure in buyers, a strong reaction to XYZ that has been range bound for so long, leads all of the retail traders to believe that it's finally breaking out, and they come pouring into it only to see Wall Street take profit from this move right here and sell into them, setting up this ABC move. So we did see profit taking here. That does set it up for this retracement. We'll see how low it gets. Our target again is right in this area right here in the low 50s. Our first target coming out of that will be this 236 Fibonacci at 62.44, and then this 83.70. We get up to that point, we'll see some likely consolidation here, and we're going to reevaluate. That's what our plan looks like for block. So where does this leave us? Cycle stage is late stage reaccumulation. Short-term roadmap, we'll finish this corrective C wave down here. Long-term roadmap is higher Fibonacci targets once absorption is complete right here. The big takeaway on this is weakness in XYZ is tactical. It's not terminal. Institutions are just managing their campaign. They're not abandoning it. Now, for traders, that means respecting the potential flush, but stay aware that this is just the staging for the next advance. If you like this level of detail, we deliver institutional breakdown and institutional analysis every week in Clarity. You'll see a coupon come up here in a second. That's all the time we've got for XYZ this week. We'll see you next week.